Truth Caviar, the show about ideas that matter. Hosted by global thinkers Brent M. Eastwood and Vadim Bichutsky. Hey everybody, hope y'all are having a great week. This is episode 4 of the Truth Caviar Show. Today we're talking all about Bitcoin. What is Bitcoin? Well, the short answer is it's a fully peer-to-peer digital currency with no trusted third party. It's decentralized with no central bank to create, regulate, or manage it. It's trustless. No need to place trust into any intermediaries or single entity that mediates transactions between the parties. Bitcoin is the first demonstrably reliable operational example of digital cash and digital hard money. But to fully understand and appreciate Bitcoin, we need to define money and its properties, trace its history, understand its challenges and its economic and political effects. So what is money? I gotta be honest, Brent, before reading the Bitcoin standard, I didn't even think about money and the consequences of unsound monetary policy. I remember when Ron Paul ran for president in 08 and 12, he was talking about the Fed, how it was inflating the money supply, but I didn't really pay attention or understand what the heck he was talking about. In the old days, people exchanged value by way of direct exchange or barter. So you grow apples and I grow oranges. I give you oranges for your apples. Sounds good in theory. However, several problems arise with direct exchange. Problem number 1, coincidence of wants. What if I want oranges, but you don't want my apples? How do I get oranges? The second problem, coincidence of scales. In other words, inequality in value. You want to get a house from me, but you can only give me watches. How many watches equal a house? Remember, there's no currency exists. What if I don't want to have all the watches that you theoretically can give me for a house? Problem number 3, coincidence of time frames. Say you want to give me apples for my horse, but apples are perishable. Even if we can theoretically agree on the number of apples that equal a horse, there is no way that I can eat all the apples before they perish. Coincidence of location. I want to buy a house by selling my current house in another state. How do we make that happen? These problems make direct exchange impractical for anything but the teeniest of all economies. There's got to be a better way to exchange goods and services in an economy. A solution to the problem of exchange is to create a single good that serves as the medium of exchange. That medium of exchange is called money. I grow oranges, you grow apples. I sell oranges for money, I take that money and I buy apples from you. That's how the economy works. Value is exchanged for money.
So what is cash? And I'll give you an example. One day after one of our podcast recordings, I went to an ATM and I got out cash to pay for our podcast hosting service to Vadim. Vadim takes that cash and he decides to buy books to prepare for another podcast. So I do not use Venmo or crypto or a digital wallet in that particular example. Vadim is happy to get the cash and he spends that. So what is decentralized finance? You may have heard of DeFi. This means that there is no intermediary or non-traditional intermediary to get between you and cash. So I use my bank account to get Vadim cash.
If you want to transfer me cash via PayPal, if PayPal decides that you or I are a bad entity, they may decide not to allow that transaction, which means money never gets to me. So PayPal is the central authority that mediates that transaction.
Good example. And if I take a Bitcoin and put it in a Bitcoin bank that holds my Bitcoin and gives me a rate of return and allows me to borrow against my Bitcoin to buy more Bitcoin, or say to buy a car with Bitcoin as collateral, and I do not finance the car through traditional means like Chrysler Capital or Ford Motor Capital, then that is an example of DeFi. So a definition of DeFi, decentralized finance, is a financial technology based on secure distributed ledgers like those used by cryptocurrencies. And the system removes the control banks and institutions like PayPal that they have influence over money, financial products, and financial services.
Yes, and Bitcoin is an example of a DeFi technology.
Yes, absolutely. All crypto.
Let's go back through history and fully appreciate this new technology. So throughout history, many things have served the function of money. Gold, silver, copper, seashells, large stones, salt, cattle, government paper, precious stone, and even alcohol and cigarettes. Remember, the main criterion for a good to serve as money is that it can be exchanged for something else of value. Karl Menger, the father of Austrian School of Economics and founder of marginal analysis, came up with an understanding of key property that leads to a good being adopted freely as money on the market. And that is salability, the ease with which a good can be sold on the market whenever its holder desires, with the least loss in its price. The three functions a good must have to serve as money. The three properties, I should say. We already talked about one of them. The medium of exchange. It has to be exchangeable for other goods. Property number one. Property number two, store of value. It has to hold value into the future, allowing the holder to store wealth in it. So if you have a savings account and you put, I don't know, whatever, $50,000 in that savings account, you don't want that money to lose value next year. You want it to maintain its value. You don't want that 50,000 to be worth 40 the next year. And that's inflation. We'll get to that in a moment. And the third property is the unit of account. The good expresses the prices of all goods in the economy. A pound of apples is $1.59. Pound of oranges is $1.29, and so on. So we also have to distinguish between hard, or in other words, sound money, and easy, unsound money. The hardness or soundness of money is how well it keeps its value over time. A money whose supply can be easily increased, thereby reducing its value, is easy money. Hard money is money whose supply is hard to increase. Gold is hard money because it's hard to mine for gold. Fiat or government money is easy money because the central bank, i.e. the Fed, can print virtually unlimited amounts of it.
So let's have sound money. Let's have strong money and not have a weak currency so we can save and invest for the future. We have long-term savings. We encourage entrepreneurs to make better goods and services. And more importantly, we have a bulwark against despotic government.
Absolutely. So hard money, as Brent said, allows people to save and invest into the future, reduce inflation, spur entrepreneurship, the economy to grow, and improve the standard of living for all. Easy money leads to a wealth transfer from entrepreneurs, creators, makers, and builders in the economy to those who print money, or in other words, bureaucrats, technocrats, the managerial elite, politicians. Easy money leads to a finalization of the economy. The economy is dominated by finance. So the Fed, the banks, Wall Street, they consume more and more of the economic output.
Hard money has a supply that is hard to increase, like gold and Bitcoin, for example.
It's really hard to mine gold. Yep.
Mm-hmm. And hard money also has what is called a high stock to flow ratio that increases demand. So stock is the existing supply and flow is money made with extra production.
Absolutely. What are the consequences of unsound or easy money? Less innovation, investment due to disincentives of savings and decreased time horizon. So if I want to build a new factory, that might take me 10 years to build. So I have to invest my money into that capital. But if it's unsound money, then the value of that investment goes down and it's not profitable for me to invest that money. In the Bitcoin standard, the author argues that all the 0 to 1 innovations happened before fiat government money became mainstays of the economy. So the Fed was founded in 1913. After World War II, many countries went off the gold standard. All the 0 to 1 innovations, or in other words, truly new innovations. 0 to 1 is a word that comes from Peter Thiel's book, 0 to 1. The invention of the telegraph, the invention of the light bulb, the printing press, and so on. Those are true 0 to 1 innovations. The author argues that even the internet may not be a true 0 to 1 innovation because it's built on top of the invention of the telegraph. So the ability to communicate between parties across distance. What are the other consequences of unsound money? More consumption in the economy, less saving and more consumption. Because I can't make money by saving, I have to consume it. That also tends to grow asset bubbles. The value of assets increases because I have to put my money somewhere if I can't save it. More frequent asset bubbles. That leads to more frequent recessions, shorter business cycles. As I said, more financialization in the economy, leading to a larger and larger inequality between those who own assets and wage earners. More wars and conflict because the government can just print money for war. Instead of taxing citizens, it can just print it. Here are some more consequences. Unlimited spending, leading to national bankruptcy. I can just keep printing money. Economic recessions and depressions, corruption of the political process, bribery, paying off voters and special interests for favors because I can just print the money as favors for people that got me elected. Promises of free lunch to all. Centralized controls, right? Those who hold the gold make the rules. Despotic governments. Sound money requires governments to be responsive to its citizens in order to finance its operation. Unsound money I don't have to ask citizens to raise taxes or reduce spending. I can just print more. The final one is the biggest of them all. Fall of empires. You look at the Roman Empire. They fell because they went from a sound money to unsound money.
They debased the currency by clipping coins.
Yep. And then also the British. After World War I, the British went off the gold standard. They were the dominant economic force in the world prior to that. And after that, the United States took them over.
And the United States closed the convertible gold window in 1971, and money ceased to be hard. Now, the Austrian economists say people freely choose money not imposed by governments. This free market competition is effective at producing sound money. So gold, impossible to destroy and is very scarce. Only silver comes close to gold and has industrial uses. So we like that too. But government money is fiat money, as Vadim mentioned. And government can increase fiat money as it sees fit, but Bitcoin cannot be controlled by governments. Bitcoin can be an international monetary system that is not connected to governments.
No central authority to control it. You can use it as digital cash across borders. All kinds of possibilities open up to free the world from centralized control.
And Franklin Delano Roosevelt banned private ownership of gold and bought it back at $20.67 an ounce. So can you imagine not being able to hold private gold yourself? I mean, that's the way it was. So very frustrating for these things. Now, going back to macroeconomics, the way I learned economics and the way many people in undergraduate and graduate schools learn economics is that there is an aggregate demand curve. And so the total economy is symbolized by Y. And then that equals all consumer goods and services in the U.S. economy. That's about 70%, plus investment, plus government spending, and then exports minus imports. So Keynes' idea of government spending, that it can increase demand and grow GDP and create jobs, that's some of the things that we are worried about in this modern economy. To take a look at 1971, when the total money supply was $600 billion with a B. Now it is at least $12 trillion in circulation. So the people's money is in government-controlled banks. Sound money should be chosen freely, gold, silver, Bitcoin. And the idea that money supply is fixed and that no government can produce more of it, then people will save for the long term. And then when we have socialism, when Keynesianism takes a terrible turn, socialism fails at the central command of money and price fixing and fails at the allocation of capital goods. So the centralization of fiat money fails.
Unsound money transfers the power in an economy from entrepreneurs, from creators, from the makers to the managerial elite, to bureaucrats, to technocrats. It's a complete transformation of the way that the economy works and who benefits in that economy.
Let's talk about the Federal Reserve a little bit too. So the Federal Reserve sets the federal funds interest rates. Those are the interest rates that you hear about on the news. So it raises or lowers. It also sets the reserve ratio, how much money is in circulation. And then they do open market operations. That means they buy or sell mortgage-backed securities or treasury bonds or bills. And this leads to money creation by the U.S. Treasury. So quantitative easing means every month the Federal Reserve engages in open market operations, and they buy a certain amount of Treasury bonds and bills plus mortgage-backed securities. And to pay for that, the Treasury prints money. So that's how we get the money creation with quantitative easing. Now, one way, and we're facing inflation now, as you know, one way the Fed is dealing with inflation is to raise interest rates, but also to do something that is called quantitative tightening. So you remember all the bonds and the mortgage-backed securities that are held by the Federal Reserve on their balance sheet. Every month, some of that debt rolls over and expires. So instead of buying more bonds, you just let those securities expire and you're tightening the money supply. So the idea is you have a lower monetary supply, and that way you don't have too many goods chased by too many dollars. That creates inflation. So this is all something that many people in the United States don't understand. They don't understand the government control over the money supply and interest rates and how that affects you. It affects you if you have a 401k. Higher interest rates means bonds are going to go down. It means stocks are going to go down. So it affects you, even if you're not a direct investor into the stock market.
Yes. And the Fed, as I said, was founded in 1913. For almost 100 years, up until 08, 09, it printed $900 billion of cash. From 09 to 14, the Fed printed something like 350 years worth of money. And that drove asset prices higher and higher. Those that make their money through assets, their wealth has skyrocketed, whereas wage earners, their wealth has remained flat. The growth between the rich and the poor, that difference has skyrocketed since 09.
The scary thing is that traditionally most politicians, policymakers, legislators did not question the Federal Reserve Bank and the system until Ron Paul came around. And Ron Paul was talking about auditing the Federal Reserve and taking a look at that balance sheet and trying to figure out where all these funds were going and how many bonds were bought and how many mortgage-backed securities were bought each month. And so it took leadership. And Rand Paul does a little bit of that, Rand Paul's son, of course. But we have to have more questioning of the Federal Reserve Bank by leaders. And that's why we're so excited about Bitcoin and cryptocurrencies, is that no Federal Reserve Bank is over Bitcoin.
Absolutely. And you can't shut down Bitcoin unless you shut down the whole internet. The gap between asset owners and wage earners has been skyrocketing since the financial crisis of 08. And so this makes our society very unstable. The rich get richer, the poor stay the same, a lot of volatility in our society. And this has real consequences for our democracy. When people feel like they can't get ahead, but the rich get richer, this is very ominous. I fear something bad is going to happen. And our leaders seem either not to be aware of it, or they seem not to do anything about it.
And a lot of the government control comes through this theory from Keynes, and it is dripped down to the educational institutions. That is how you learn about economics. Nobody questions government spending. It doesn't seem like. Both parties under Trump and also Biden have spent money incredibly high on the government side. And then you have quantitative easing by the Federal Reserve Bank, and you get trillions and trillions of dollars in the money supply. So let's talk about Keynes. This is the idea. Keynesianism is the idea that government must expand the money supply to control Y. Remember Y? I talked about the total demand of the economy is Y. And so this has a way to reduce recessions, the Keynesians believe, and to keep employment levels high and reduce unemployment. So this is the idea that government must stimulate spending. And if you know about the New York Times columnist and Nobel laureate Paul Krugman, he is a huge defender of government spending and Keynesianism. He's even said that he wishes we had an alien invasion so the whole world would unite and spend more money through the government to stimulate the economy.
So basically, Keynesians believe that the government can grow the economy.
And to keep unemployment low and GDP high.
What do you think? I think there's some truth in that, right? If the government invests in industry, smartly, but like everything else in government, they completely overdo it because politicians they're not interested in helping the average citizen. They're interested in helping themselves and their special interest friends. People who believe in Keynesians tend to be on the left side, would you say, of the political spectrum? Just like everything that the left wing says, that the government is your daddy and that the government can do. There's some truth in that, but the problem with government is that they're not very efficient in allocating capital.
Exactly, and that leads to socialism. And Keynesians also do not believe in reducing taxes and not influencing the savings rate.
In fact,
they want consumers to spend more money.
In fact, correct me if I'm wrong, but Keynesians believe that tax cuts are bad because it takes away money from the government to invest into the economy.
That's right.
Is that
it's a deliberate control of money by government for saving.
Keynesians' worldview is basically comes down to government knows better than the average citizen what must be done to grow the economy.
Absolutely, and that's the Federal Reserve Bank knows better.
And I think that's a fundamental. I feel like not just in economics, but like in society in general. I think that that's the fundamental difference, I feel like, between the left and the right, is that like the left believes that the government, the bureaucracy, the technocrats know better, whereas the right generally believes that the average citizen knows better what's best for them. Do you think that's accurate?
Somewhat. And the other problem is that people who are working and don't have time to think about politics or trying to put food on the table, they may or may not have a college degree. They may or may not have taken classes in economics. They don't understand the Federal Reserve System and how interest rates are incorporated into the political calculus. And the policymakers, because of this ignorance, do not face the consequences that they normally would in a society that is free and has to not deal with the Federal Reserve Bank.
So you can see why, especially left-wing governments, why they love Keynesianism, right? Because it gives them power. It puts power in their hands instead of the average person. So you can see why universities and think tanks and pretty much every institution that gets money from the government, if they have embraced this Keynesian worldview.
I'm telling you, it is really hard to break away from that because I was indoctrinated into that as an undergrad. And also when I studied macro in grad school, and all macro is the aggregate demand curve, that the government is trying to increase spending to reduce unemployment. That's the idea.
Are you saying, Brent, I only took one economics course in college. Are you saying I did the right thing by not taking more?
Did you take macro or micro? Do you remember?
Actually, I think it was the first one. Which one? I think the first one is macro. Is the first?
You can take either one first.
Yeah, I don't remember. I think we talked about the aggregate demand, so it probably was. I think it was macro. It was more at a higher level, I believe,
and included the government. So it's like political economy. Whereas micro is for individual firms, study of individual consumers and individual firms and their behavior.
Yeah, I believe it was macro.
Yeah.
So
now, on the other hand, we have the Monetarists. So the Monetarists are led by Milton Friedman. This movement became big in the 1970s. This still envisions a role of the government and the Federal Reserve Bank. It's a slightly reduced role of government. And the idea is on the supply side, you can cut taxes to spur, get more money in the hands of people and the firms make individual decisions for investment, to create jobs, to create better goods and services. And that is how you spur the supply side on Y. So you're increasing money in people's pockets by tax cuts. The problem is tax cuts can also increase the budget deficit. So when you increase the budget deficit, you still have to go back to the Fed, sell more bonds and mortgage-backed securities to fund the debt. Treasury prints more money. So we're always getting inflationary pressures, all because of the government. Now, monetarists believe that when times get tough, you can step in and prevent money supply problems and financial collapse. So going back to 2020, during the pandemic, that was the idea that the monetarists would have agreed with, where you really increase the flows of quantitative easing. The other idea behind monetarism is to stop deflation. So you have inflation, higher prices and wages that are out of control. You have deflation, lower prices and wages, and that leads to a sluggish economy. And so that can create a deflationary pressure that makes jobs scarce and gets people laid off. So monetarists believe that deflation is the biggest problem. And they would point to Japan and say, look at Japan. Japan was rising in the 70s and the 80s, but they hit a whole, I would say, 3 decades of deflationary pressures where their government tried to prime the pump, tried to spend, tried to do helicopter money from quantitative easing. They could not get inflation. They could not get higher wages, and they could not get the GDP growth that they had. So Japan is an example where the monetarists would say, hey, we have to increase the money supply even better. But I would argue that monetarism in Japan has failed over the decades. Government spending creates inflation, and that's one of the problems with monetarism. And they believe in small increases in the money supply. But again, this is government control over money and finance and interest rate.
I understand inflation, and deflation is the reduction in prices.
Correct.
Right? So what economic policies lead to deflation?
Well, it's when you have a contraction of economic activity. So more unemployment.
Okay, so that makes sense. So if there are more people unemployed, then the businesses can't charge as much. So they have, by definition, people have less income, less disposable income. So they have to reduce prices.
That's what happened in Japan, and that's what happened to after the financial crisis from about 2010 to 2011. The United States had deflationary pressures, and that is really hard to deal with. The Japanese had struggles with deflationary pressures
because they had high unemployment, right?
Well, they had high budget deficits that artificially kept their interest rates low. And so low interest rates usually firms will decide to borrow more money. There's more money supply, but they just couldn't crack the code in Japan. And so the monetarists and the Keynesians were determined that their point of view is not correct for every country.
If you have low interest rates, people are willing to borrow more.
That is right. Personal loans, mortgages, credit cards.
Or if you're a business, right, you can borrow more. Right?
Capital investment from loans.
Okay, so what happened in Japan? Like, why was that a bad thing?
Their GDP to debt ratio was extremely high. The government was trying to spend, and they were spending money on public works and infrastructure projects.
Basically, so something that Keynesians love, right?
They love that stimulus to stimulus
essentially
money.
What FDR did in the Great Depression.
And what Biden did with his infrastructure.
Right, and what Obama did with his stimulus. Right?
With his stimulus, which was supposed to create jobs in construction.
Right. Shovel-ready jobs, remember those?
That's
right.
So
I love this quote from Ludwig von Mises. So remember I told you the difference, we're talking about how unsound money transfers the power in the economy from entrepreneurs to the managerial elite. So I love this quote from, as I said, Ludwig von Mises. Those who confuse entrepreneurship and management close their eyes to the economic problem. The capitalist system is not a managerial system. It's an entrepreneurial system.
I love that. And it says so much. And it says something about the managerial class, the people, these technocrats and bureaucrats that work in the Federal Reserve. In fact, Jay Powell, who is over the Federal Reserve in the United States, is a central planner, and he doesn't even have an economics degree. He's a lawyer by training. So we're trusting huge decisions with him. And that is something that scares. He doesn't really have any entrepreneurial experience. The people at the Fed, the people who are staffers at the Fed have always worked there. They have no idea. They haven't been out in the economy. They haven't been in the private economy, in the private sector. So they don't really know what is going on. So the Austrian, now I've had trouble understanding the Austrian school of economics because I've been so inundated and influenced by Keynesianism and the aggregate demand curve. So it was really hard to wrap my arms around the Austrian school, but let me give it a shot. So Austrian school, we mentioned Ludwig von Mises, and Murray Rothbard is another Austrian economist.
Hayek?
Friedrich Hayek, absolutely. Thank you. And so Austrian school is the belief that the absence The absence of government control leads to sound money. There's our sound money again, gold-backed fiat currency.
Yeah.
And it leads to savings. And that the
and it
money
leads to economic growth, and it leads to prosperity, and it leads to new technologies and new inventions.
Of course, and you fix that money supply, like Bitcoin.
Well,
the
I
money
love this
supply is
logic chain.
fixed.
You can just trace this logic chain from government policy to sound money to economic growth to investment to prosperity to new inventions. I love that.
Yes, and it keeps a lid on inflation. So when you have a fixed money supply backed by gold or Bitcoin, the prices of goods and services are going to drop. Now, appreciation of the currency could lead to more savings for the long term, and that's good too. Depreciation of the currency leads to short-term speculating to chase yields, which is what we get on Wall Street.
So, Brent, would you say that monetarists, are they closer to Keynesians or they're closer to Austrian?
That's a great question. And I would say monetarists are closer to Keynesianism because of the belief in government control over the money supply.
Okay, right. So monetarists, actually, the only difference between, so how would you define, like in one short sentence, what's the difference between monetarists and Keynesians? Basically tax cuts? Is that?
It's known as the demand side versus the supply side.
Okay.
So Keynesianism is to boost on the demand side, the growth with government spending. And then supply siders believe in tax cuts to boost the economy. Both are going to lead to deficits.
Right. But it's like who has more power, right? Is it the people or is it the government, essentially, right?
Yeah.
So I got a question for you. Do monetarists believe in government spending at all? Or, I mean, do they believe that there's some value in government spending?
They nip around the edges of it, but they're mostly concerned about the supply side aspect of cutting taxes for individuals and companies.
As a non-economist, this is something that I've been confused about. So when you say supply side, you're basically you're not talking about money printing, right?
No.
You're talking about tax cuts.
Yes.
Right? Okay.
More money. The supply of money is increased not by the Fed, but by decreased government spending and decreased tax and a lower tax rate. We'll get more money into the hands of business owners and individuals.
Okay, I got a question. But then is there any difference between Keynesians and monetarists as it relates to the printing of the money?
No, they both believe that the Federal Reserve Bank is essential to have a balance sheet and to have treasuries and other types of securities on its balance sheet. Therefore, there's a kind of a paper trail of money that Ron Paul wanted to check out to make sure that it was actually sound. Okay. But that way, the Treasury can print more money.
Okay, so the only difference essentially is more government spending Keynesians, more tax cuts monetarists.
That's a quick and dirty.
That's quick and dirty, right?
Quick and dirty.
And Austrians have no love for monetarists, obviously.
Yeah, and hatred for Keynesianism. Correct. Again, we're going back to gold as a standard. The Austrians warn us about unsound money. And they warn us about the money supply increases because of government yearning to stay in power. So this is a self-perpetual thing. It just breeds and breeds more government power. And they also believe that the governments lie about the cost and benefits of government spending and tell people that stimulus checks are what you need and infrastructure bills are what you need. The Japanese tried this. They tried to spend more money and spur the economy by big public works. The Chinese government is doing the same thing. What that is called is malinvestment. So malinvestment is when the government comes in and says, oh, we know better. We have a 5 to 10 year plan. And in China's case, we're going to do this Belt and Road Initiative where we build infrastructure all around the world in different countries and kind of spur a way to invest strategically that helps China in the long run. And they also build these what are called ghost cities because they're centrally planning population growth and movement. And the Chinese have a huge demographic imbalance because they had years of a one-child policy and their workforce is getting older. So China is dealing with depopulation and demographic pressures, and then they're spending a lot of money on the government side, trying to call that investment. And so the Austrians would point to China and Japan and say, and the United States and say, this is what you want to avoid.
So malinvestment is basically misallocation of capital.
Yes, that's correct. And misallocation of government investment. Trying to pick winners and losers.
Again, Brent, as a non-economist, I come from a technology side. I didn't study a whole lot of economics, as I said, in college. But sort of thinking logically, let's say the economy is in trouble. Let's say we're in the Great Depression. Mm-hmm. The economy is in trouble. So how do you grow, like fundamentally, how do you grow an economy? You have to have new industry, right? You have to have new investment and new companies that hire people, right? The private sector grows the economy, not the government.
Small businesses,
right? And so if you're a Keynesian, if you have a Keynesian mindset, right? Let's say you are FDR during the Great Depression, right? It doesn't make sense to me. While it's honorable for the government to say start public works projects and hire people, that's like a temporary fix, right? Like even thinking logically, right? You have to put money in the hands of the creators and the builders that will build new systems, new enterprises that will hire people, right? Does that kind of logically make sense, what I just said?
Yes, and I would argue FDR created the administrative state. He was one of the first creators. Well, Wilson, you could argue too, created a public employment class. But with all the alphabet agencies that WPA and many other three-letter words
SEC,
that and you learn in school. That's another thing, that FDR saved the economy and that everybody was for it. Well, victors get to write history. But a lot of people don't know that there was a pushback against FDR by the Republicans who believed that the government was becoming too big and had too much control over the economy. And that all started all the way up until World War II. And so, this is really what you have to watch out for, because unsound money, dictators love unsound money. And that's one of the ways to control the populace. You control the currency, you control the value of the currency and the money supply, and you do government control over the money supply, that the government knows better, the Federal Reserve Bank knows better than you, and that they have experts in the economy or economics, and they are going to save the day. And I think that is really scary because we've seen this in other countries. We're seeing it in our country where you're getting these huge public works that are these projects that are supposed to create all these jobs, and they don't do that. And then you get into deficit problems, you get into money supply problems, you get inflation problems. And that is what we're facing right now in the United States economy.
FDR's story is really interesting. So when he ran against Hoover in 1932, in the midst of the Great Depression, he was actually the one that advocated for free market. So it's kind of paradoxical. Hoover was the one who advocated for more government intervention. And FDR was like, hey, we have to let the private sector rise again. And then when he got elected, he flipped completely. Sort of reminds me the way Obama ran in 2008 and then what he actually did once he got in 2009. He ran as this moderate who would listen to all sides. And then he completely put in the stimulus that was completely basically like a giveaway to his cronies. So it's kind of interesting that actually Hoover was the one that advocated for more interventionist government in the economy. And then going back to actually the 20s, why did the Great Depression happen? The conventional wisdom is what? That all these banks got greedy.
Wall Street got greedy.
But it was actually the Fed that increased the money supply and drove this asset bubble that crashed the economy.
And it was a global problem too.
Okay, well, was it global too?
Yeah, because in Germany you had hyperinflation.
Yeah, okay. And so we see again and again that the Fed is actually the one that basically creates these bubbles, these boom and bust bubbles that have a very pernicious effect on our economy.
So this gets us to Bitcoin, which you've been waiting for, and we apologize for doing too much economic history, but we want to give you a foundation. It's important to understand the foundation of where we came from. Satoshi Nakamoto, the founder of Bitcoin, with the famous white paper.
Yep.
And this is a belief that monetary policy cannot be manipulated by government because you have something outside the financial system. So there's proof and verification. It's a peer-to-peer network. You have distributed ledgers that record transactions. You have a computer network that does proof of work problems to mine Bitcoin. There's a new block every 10 minutes. There's only 21 million coins. The code is transparent. There's absolute scarcity. It's scarce and not reproduced infinitely.
Yep.
And the supply is strictly limited.
21 million Bitcoins.
Mm-hmm. And by 2140, all the Bitcoins will be out there. So that is a cap on the monetary system. So we know that Bitcoin will always be scarce. And this gets into something that I call and others call the sovereign individual. So when you have Bitcoin, you can become a sovereign individual. You can live anywhere you want. You can opt out of government and Keynesianism and monetarism. You can opt out of the administrative and management state.
Of the central planners.
You can be decentralized. You can get away from banking, get away from intermediaries, and then the economy functions as a grouping of sovereign individuals making their case for entrepreneurship, getting away from the administrative state, and increasing employment and all the other things that you want to do with an economy, but it's done through the free market under decentralized finance.
It's essentially a libertarian's dream.
Exactly. I love that about Bitcoin, about being a libertarian situation.
Being free, being able to live in some remote island and send money to somebody, halfway around the world in the blink of a second.
Sure. Now, my experience with Bitcoin, I go back to 2013. That's when I started following Bitcoin. And I had a tech startup that used government actions to predict financial market moves. And I was posting a lot on social media about Bitcoin because government regulations, I believed, were going to start taking effect on Bitcoin. So I thought this is going to be a big deal. Now, the problem was back in 2013, 2014, that time frame, there was a Bitcoin exchange called Mt. Gox in Japan.
Right.
And they were managing 70% of all Bitcoin transactions. And then Mt. Gox got hacked. And the thieves stole around 740,000 Bitcoins from Mt. Gox. And that was individual holders. And then they stole 100,000 Bitcoins from the company itself. And that crime was valued at about 460 million. And when that happened, I got really scared about Bitcoin. I was like, this is not going to be sound money because it is not secure. And I did not own Bitcoin at the time. But nonetheless, I was scared of Bitcoin for it not being secure, as I said before. But I was still interested in tracking it. Then I started associating Bitcoin with the dark web and crime. And this was when Silk Road, remember Silk Road, was using Bitcoin to transact in illegal drugs and weapons. And I thought Bitcoin was tainted. And especially when Silk Road went down in 2013, when the FBI ended it and arrested the founder. So I'm pretty mature when it comes to Bitcoin. I'm still a little bit scared of it. I've never had a digital wallet. I don't think I will ever own a digital wallet. I will never trade in it, but I'm a long-term holder. I use SoFi to hold my Bitcoin, and I use it as a store of value for investment purposes. So I'm long and I'm bullish on Bitcoin. I got about 1% of my net worth in Bitcoin and Ethereum. I've lost money in the latest Bitcoin winter, where Bitcoin has really dropped since last fall, but I'll still hold it and not sell. If it goes down below 20,000, it's trading about 21,000 right now. If it goes down to 15,000, I'll buy more. Now, why do I like Bitcoin again? It is for the rebels, mavericks, and libertarians. It is the people's money. It's outside the financial system, so you want to be away from government control, and that's great about Bitcoin. No more central banks and dealing with Federal Reserve Bank. It's anti-Keynesianism. It's an alternative asset as the people's money. It's finite and scarce, and it's sound money. And the tech underneath it is genius. Now, I don't pay for things in Bitcoin. Maybe someday I will. I don't view it as legal tender. Now, I'm going to get a lot of pushback from any DeFi person or Bitcoin enthusiast who listens to this podcast because I'm not completely all in on Bitcoin. And there are Bitcoin people in the crypto community that are rabid, and they'll attack you on Twitter if you're not 100% Bitcoin absolutist. But I do like when Bitcoiners get in these big conferences. They go down to Miami, Florida, and there's strength in numbers with Bitcoin. Right. There's a community. Right. There's a libertarian kind of rebel community that I really like. Now, what do I do not like about Bitcoin? Unfortunately, it's not decoupled from technology stocks. This last sell down, it's correlated with tech stocks, and that's a disappointment. So people who are getting rid of their tech holdings and this last sell-off, we're actually in a bear market right now. Tech stocks have gone really down. People sold their Bitcoin too, and mainly institutional investors on Wall Street and others. It's not really acting as a hedge to inflation. Now that could change. You should be able to own gold and silver and Bitcoin and real estate and hedge that against inflation, so you're not as hurt as much.
I'm wondering if that correlation, it's probably related to the Fed policy, right? As asset prices rise, both Bitcoin and the stocks increase.
Well, you think so. But when there's a sell-off, when the institutional investors are in on it, so you have the retail investors, the Bitcoin absolutists who are like, I'm going to hold to dear life, hold to the moon. You also have ownership by institutional investors. So pension funds, hedge funds, mutual funds.
Right.
On Wall Street and all over the world are holding Bitcoin too. They want to get in on it. They want it as an alternative investment. But they sell. They don't have that long-term vision and that ideological part about that we love about Bitcoin. Right. Institutional investors, they don't care. It's just another asset to make money.
Correct.
So when it's time to sell, they're out of Bitcoin, and maybe they'll buy it again when it goes lower. But to them, it's not decentralized finance. It's not a way to remove themselves from the financial system because they are the financial system.
It's a moneymaker.
It's another moneymaker.
Right.
And inflation, you would think that Bitcoin would be going up inversely with inflation, or going up with inflation. But that's kind of a really frustrating part of Bitcoin. It is a religion for some people. We call them Bitcoin maximalists, and they'll turn on you if you criticize anything about Bitcoin at all. So I might get attacked on this podcast if they find my Twitter account. But I'm still long Bitcoin. I still like Bitcoin. And now, one of the problems you've had in this Bitcoin winter is you have several entities, a hedge fund and other traders and other types of Bitcoin entrepreneurship projects and companies that have gone down. So let's do one case study on this entity called Voyager. This Voyager was a Bitcoin exchange. I say was because they filed for bankruptcy recently. But they were a Bitcoin exchange, and they were also a bank. And now they're going through bankruptcy, and people can't get their money out. So there was a run on Voyager of people trying to get their Bitcoin out, and it was trapped in there. So this is very scary. So the question is, are we going to have more contagion in the Bitcoin economy, or are we through the worst of it? And I would argue that I think the weak ones have been purged. And I think we're through this. I think we're seeing a lot of resistance around 20, 21,000 and it's slowly going up. So there's some green shoots in the Bitcoin market. So I think that's good. But Voyager, very scary. And what they did is they, somewhat of a Ponzi scheme because they took their money of depositors. So you deposit your Bitcoin in Voyager and you get an APY. You get interest. And that is great. And that was Voyager's business plan. But the mistake they made is they loaned out hundreds of millions of dollars to a hedge fund that also went down. And so they lied. They also lied about being a FDIC insured entity. They had partners that were FDIC insured, but this was not clear to a lot of people who put money into Voyager. They were like, oh, my money's going to be secure. I'm getting a 6% to 9% APY in my Bitcoin. Oh, I'm going to take it. That's great yield, and it's guaranteed by the federal government, backstopped by the federal government. No, it turns out they really weren't FDIC insured. Their partners were, but the money that you put into that. So normal, everyday people have lost money. Teachers, Uber drivers, people who don't have a lot of net worth were putting all of their net worth into Voyager and some of these other trading accounts and going bust. And the other thing about Voyager is they were able to forge a partnership with Mark Cuban and the Dallas Mavericks.
Oh, interesting.
And so that gave it more cachet. They were like, well, Mark Cuban is involved. So you could join and get $10 of free Bitcoin with a Mavericks code. You put that in and join. Right. And so Mark Cuban got burned too. So people are getting burned in Bitcoin. We're going through a crypto winter. I think the worst is behind us. As I said, I'm long Bitcoin. I'm bullish. I think it's great. But you got to watch it. And There's people like Michael Saylor, the CEO of MicroStrategies, who has become in the private sector, the biggest holder of Bitcoin coins.
Yeah, he said something like 99% of his of MicroStrategies investments are in Bitcoin.
Yeah, so is Tesla. So these guys are visionaries. I don't want to get a digital wallet. Would you get a digital wallet?
I don't have one yet.
But would you get one?
Would I get one?
Would you transact goods and services in Bitcoin?
Yeah, I would, because of privacy. I don't want anybody snooping on my transactions. Who knows, PayPal, who knows what they do with that data? Not that I do anything nefarious or anything, but you never know, where that data ends up, who has it, what other profiles they can build with that data. So, yeah, for privacy reason, absolutely.
Let's talk about the El Salvador case study. This is a government experiment with El Salvador's government. They spent $425 million, bought Bitcoin, over $400 million. So government owns the Bitcoin in El Salvador. They make it legal tender, so people can use it as legal tender to buy goods and services. It's not really working out for El Salvador. Now, it could change. A lot of it has to do with the price of Bitcoin diving. The value has gone down. But they found out that the people are not taking to it and spending in Bitcoin. Now, why? Is it because they don't understand it? Is it because the government didn't do a good enough job of education? Is it because they're scared? Why are they not taking to it as legal tenders? So that's a question. When other countries decide to go into Bitcoin too, are they going to look at El Salvador and say, hey, I'm not sure the International Monetary Fund is not being good to El Salvador because they're missing debt payments. So El Salvador went to the International Monetary Fund and said, hey, can you give us a loan? We're having trouble meeting our debt payments. IMF said, no, as long as you're investing in Bitcoin, we want you to liquidate your storings of Bitcoin, then we'll give you a loan. IMF is always known for making conditions on their loans and their financing. El Salvador so far has said, no, we are not going to liquidate our Bitcoin. And so this is something that we need to watch very closely in El Salvador and see if other countries follow suit. So this is what we have decided about Bitcoin. We think it's great to be decentralized. We think it's great to be off the financial system. It's sound money. It's scarce. There's a limit to it. There's a finite amount that will ever be issued. We're probably not going to get all the way to the end of mining all the Bitcoin by 2140. So in our lifetime, and you have tremendous upside. As long as you're not using some of these shady exchanges and banks, you have to really watch out. And that, Voyager is a cautionary tale because the people involved with Voyager, they were great people. Very qualified. Former CEO of E-Trade was in on it. I mentioned Mark Cuban. So you got to really watch it. These Ponzi schemes are really scary.
So, Brent, do you have any thoughts on the environmental impact of mining Bitcoin?
That's a great question. Mining Bitcoin with these huge operations, it takes so much electricity. And of course, electricity creates ways that you have to power the electricity. If it's coal-fired plants, you're making more pollution. So yes, that is a concern. These Bitcoin miners are going to be going gangbusters in the next 50 years.
So does it mean that because of that environmental impact that Bitcoin can't really become the natural, kind of like the everyday currency? Because
it's so easy to print cash? To print fiat money as opposed to mining Bitcoin.
Right, exactly. Do you think that's I guess what I'm asking is, what do you see as the future of Bitcoin? I don't know where we are right now. Many people kind of use it for investment purposes. And, sometimes you see online, you see some online entities, you can pay in crypto or whatever. But what do you see as the future of Bitcoin? Will it become a dominant currency? Will it be an alternative currency? What are the societal implications of it? I guess, that's what I'm asking.
I think it's going to be tough for it to serve as legal tender. If you ever tried to explain Bitcoin to somebody who doesn't know anything about Bitcoin, like some of my family members in Texas, I tried to explain it and it just went over their heads. So one of the things about Bitcoin is it is complex. It is risky with that private key. You can lose your private key, which is your long password.
Right.
There have been people who have lost Bitcoin because they couldn't remember
you can also
private
lose your cash, right?
But you can also lose your cash too. And so I think the real test will not be as a store of value and an investment instrument. I think that is here to stay. I think it will have to become legal tender where people use it a lot and that the money transfers more for international trade. So that's the question of the future. I think it's here for investment. I think it's here for store of value. I think it's here for buy and hold people. And people are just holding onto their Bitcoin until it's going to become the alternative legal tender. And now, will governments issue their own form of digital currency? That's the
there's been some talk about that. Yeah. We don't give investment advice. I understand that, but I'm just curious. If somebody has extra cash on hand, do you recommend? I mean, obviously, each situation is different, so everybody has to make their own decisions. But generally speaking, if somebody has some extra cash, do you recommend investing in Bitcoin?
Especially in times of inflation, I do. And I want, though, to have people become as educated as possible. Not if you've heard a tip at a party or heard a tip from a cab driver. Do your research.
Due diligence.
But there's something called alternative investing, and with hard assets. And these are people who believe in precious metals, gold and silver. They believe in holding gold miners stocks. They believe in oil stocks. They believe in real estate. They believe in art. And so I think Bitcoin is part of that mix. So if you look at your net worth and, your stocks, bonds, and, for your 401k, I think 5 to 10% of your net worth or your savings could be Bitcoin. Now, the problem is, or crypto. Problem is people are using these banks, these crypto banks, and they're putting their paychecks into the banks, and it converts over to whatever crypto you want or whatever Bitcoin, Ethereum or so forth. And so I think that is very risky. And that's what happened to some of these people who can't get their money out of Voyager. I mean, I don't think there are some professional athletes that are saying, pay me in Bitcoin. There's some politicians that pay me. Right. Yeah. So do you take it all and put your life's money into crypto? I think you got to step back and look at it in terms of an investment for the future. And fiduciarily, we should say that we're not financial planners at all. But, I think it's good for an alternative investment, and it's the future of money. So be in on it. Be in on it because it is exciting. And, listen to some of these podcasts with Michael Saylor, read some of these books. Yep. And, some of the YouTube videos, and see if Bitcoin and crypto is for you. Trading it, I would be very careful about that unless you've traded stocks before or traded bonds. If you trade securities, hey, yeah, go for it. Trade Bitcoin and other crypto. There's a lot of altcoins, of course. They're called different things that are a little more derogatory that you can't say on air. But the altcoins are very risky, but you can make a lot of money doing that. It's all about risk and reward and speculation. So evaluate your own risk. And what's scary is that some of the people who lost money in Voyager, they did it as a family, as a couple. So some of the big losers, they told their wives about it and their husbands. And they said, this is going to be safe. And they put a lot of money in. Now they can't get it out. So don't bet anything on Bitcoin that you can't stand losing. That would be something that I would warn about.
Don't bet your life savings.
That's right. But decentralized finance is really great too.
It's good to diversify your portfolio.
Absolutely.
With Bitcoin.
Again, so one of the things that we want to influence you as much as we can on Truth Caviar is to do your own research, read some of these books, whether it's podcasts
Don't
or
take
YouTube.
our word for it. Do your own research, due diligence. We're just giving you our thoughts. You can agree, you can disagree. Don't take anybody's word for it.
These are exciting times.
Absolutely.
I mean, it is really exciting, and make sure you don't get involved with too much of the Bitcoin maximalists because they'll come after you. But it's okay. They're bullish. They're holding. They have a lot of money tied up into Bitcoin and crypto. So you can understand where they're coming from. They don't want any naysayers. Check out Michael Saylor. It's Saylor. He's the CEO of MicroStrategies, and that is a tech company that's publicly traded. And look at some of Elon Musk's comments on Bitcoin. Be careful out there with some of these exchanges. You probably want to stay with FTX or Coinbase. It's just like with this podcast. We went with the most well-known and a little bit expensive, but the number one rated podcast host. And so think about making sure that you're dealing with your Bitcoin. Now, I don't trade it. I hold it through SoFi. That's another platform you can just hold. You can't spend. It doesn't have a digital wallet. But we hope you enjoyed this podcast and Truth Caviar, Vadim Bichutsky, Brent M. Eastwood, and we look forward to you hearing us again.
Next week, we'll talk about the administrative state and the rise of the managerial elite.
Well, thank you, everybody. I hope you have a good week, and tune in to us again next week with Truth Caviar.
Thank you.
Thank you. Thank you for listening to the Truth Caviar Show. Email us at truthcaviarshow@gmail.com and let us know what you think about the show. And remember, no bias, no bull, no fear, just hard truths.